Welcome back to That Backyard Property Pod. We're here today for another mini episode, and we're tackling all things refinancing. This is a guide to refinancing, and I cannot wait to jump into it because it's such a common thing I get asked about how to refinance, how quickly should I refinance, when should I refinance, and there's some common myths that are involved in this. The number one myth is that your loan term is reset every time you refinance. Every time you refinance, you decide how much of a loan term you want. If your current loan term is 25 years, then make sure you tell your broker that you want the loan term to be 25 years. One key point in that, though, is if you're looking to maximize your borrowing capacity, you may need to extend the loan term back to 30 or 35 years in some cases. This allows you to borrow more. Remember though, if you have a variable loan, then you have the ability to put money in offset and make extra payments. So the loan term actually doesn't matter. It does matter in the case of people that just want to pay off their home as quickly as they can, and they don't feel disciplined enough to make extra payments. For anyone listening that's you, make sure your loan term continues to reduce if you do refinance. Let's look at reasons why people refinance. Number one, getting a better interest rate. There's no doubt that the loyalty tax is true. If you have been with your bank for longer than 5 years, I guarantee you they would have increased your interest rate more or are charging you more than a new customer. So every 5 years, if that is you, then make sure you reach out to a broker or your existing bank and try and get a cheaper rate. Rather than refinancing though, you can get a better rate with your existing bank. Most banks have a retention team. What I would do, call your existing bank, ask for a discharge. That is the document you need to sign to leave the bank. As soon as you ask for a discharge, it triggers the retention team. Discharge person, I'm going to put you through the retention team. That person's sole job is to keep you at the bank. If you do this right now, use ING, Macquarie, NAB as your reference point. Tell them, if it's an owner-occupied loan, tell them that you can get 5.3% and see what the retention team does. It's amazing how quickly they'll drop your rate. And then you don't even need to refinance. So if you're purely looking to refinance for your interest rate, make sure you call the discharge team first of all, because you're going to need that anyway. Talk to the person in retention. If they give you the discharge form straight away, then they never wanted to keep you. So don't be insulted, take the discharge and off you go. If they drop your rate, and they might even give you a cash rebate. I know ANZ are doing that. St. George are. If you're with St. George, tell them you're leaving and they'll give you a cash rebate. Just jump on and give it a crack. I guarantee you'll get a better rate. If not, reach out and we'll help you refinance. Number two, why do other people refinance? They'll refinance because they want to invest in another property. The reason they do this is because the valuation is generally higher at another bank, coupled with a lower interest rate. You can then get cash out, and I covered this off in a previous pod, but let's go into it in a little more detail again. If your loan is $700,000 and your valuation comes in at $1 million, the banks will let you borrow up to 80% of that value, so $800K, and your existing debt is $700,000. Subtract that from the $800K, you're left with $100,000. That $100,000 can be used for whatever you want. Take your $700K, get the $100K, and use it to invest in shares, invest in property, whatever you decide. You can consolidate other debts. You can get cash out to renovate. Any of those reasons you can do. So when people are refinancing for that purpose, make sure you get valuations across each bank. Some banks are a little more lenient than others. CBA, Bank West, Macquarie, Westpac are all really strong valuations at the moment. Jump on and do that. Check the valuations, get your broker to do that, and then work out what equity there is, because then you can look at refinancing and getting that out. One of the important parts is if you take that cash out, that $100K I discussed earlier, make sure the loan product is interest only if you don't know when you're going to use that money. The reason being, the new $100,000 loan against the offset with $100,000 as a cash out, you are paying no repayments because there is no interest component. Once you draw down on that $100,000, you'll start making interest component payments. If you want to do this for principal and interest purposes, change it. It's so much easier to go from interest only to principal and interest. Just a form or a call to your bank. So recapping, one of the other reasons people refinance is to get cash out. Number 3, debt recycling. If you are looking to debt recycle, then you need to generally refinance to another bank. Recycling your debt is all about reducing your owner-occupied loan and increasing your investment portion. So if we go back to that same scenario, $700K loan, $1 million valuation, if you also have $100,000 to invest, you could firstly seek your tax advice from your accountant. From a lending perspective, you take your $700,000, pay it down with $100,000, so your balance is now $600,000, and then that second loan, that investment loan, is now $200K. So your overall debt position is the same, but your own-occupied loan is $600,000, your investment loan is for $200,000. Now, obviously, the intention is for investment purposes to generate a yield somewhere else. This is not tax advice. It's general in nature, but make sure you talk to your accountant because they are going to provide you the right tax advice and then advise your broker how you should structure the loans. Now, remember, as soon as you change the loan and the purpose of the debt, it will change the way that it can be viewed from a tax perspective. So before you pay down any debt, leave it in your offset and put it in the loan only after speaking with your accountant. So those two are the reasons. The third reason people do it is because they want to increase their borrowing capacity and therefore they'll increase the loan term. So as I said, you do not need to increase your loan term, but some people will because the longer the loan, the more you can borrow. So if we're talking about investment, having a higher borrowing capacity will allow you to do that. I'm such a big advocate for being comfortable with your debt. So please do not borrow more than you're comfortable with. The bank obviously has their assessment rates and their buffers, but you still need to make that repayment. So before you go ahead and do any of that, make sure you're comfortable with the new repayments, whether that be principal and interest or interest only, because the ongoing repayments will affect your lifestyle and your cash flow. And I guarantee you, if your cash flow is struggling, that lifestyle will struggle, and so will your financial stress. So I urge you to make sure you're comfortable with that increased debt before you go ahead and pull the trigger on that. How do you refinance? It's really simple. You have valuations across each other banks. You then should have 4 different lenders or banks as a comparison that your broker provides you. The things I'm looking at: interest rate, application fee, ongoing fee, and any cash incentives that you might have. So please, when you are refinancing, make sure you have 4 options. Look at the valuations of each of those options, determine what value or equity there is available to you, and then what will happen, your broker will prepare the application for your chosen lender or bank. You will submit the application because you'll need to provide ID, payslips or income documents, the loan statement for the loan refinancing, and any other bank statement that might be relevant, plus any other additional documents, HEX, notice of assessment, Medicare card, all those sort of things. Provide that to your broker. Broker prepares the application. Now, most banks are taking 2 to 3 days to approve an application. The issue with refinancing is you need to discharge from your existing bank and they determine the time frame. So even if your new bank is going to do this quickly, the process slows down with your outgoing bank. Because why would they let you leave to another bank when they can just keep clipping the interest? So that's why getting that discharge done early will allow it to happen quickly. At the time of settlement, you do not need to do anything. Both banks will invite each other on PEXA, which is the online settlement platform, and your existing bank will have its loan and your new bank will have the new loan and it will use that loan to pay out the existing debt. Any surplus funds will be left in your offset account, ready to go. Obviously, in this process, you would have kept paying down your loan, this loan that you applied for will stay the same. So there should be leftover surplus money. One of the most important parts about refinancing is at settlement day for your existing bank, any interest that has been accrued for your loan will be added back on top of your loan and therefore paid out. So your new loan will pay out the existing loan plus whatever interest is added or accrued over that period. So there's a few moving parts in there. Your broker will advise you through the process. You should have the offset account all set up, ready to go. Offset ready from day one because interest is calculated daily. So you want money in your offset from day dot. This is all things refinancing. I'm a big advocate for it, especially if you're looking to access equity you have in your property to use for investment purposes. Remember, please like, follow, subscribe. This podcast is building a really strong community, and I'm so proud of that. It brings me so much joy. I want it to grow more, and I need your help. So please share it to anyone you think might need this. As I said, subscribe, do all of that stuff, share it. I'd love to hear your support, and any questions, comments, any feedback, please reach out. Have a wonderful, wonderful weekend. See you on Tuesday for the next podcast, and then again next Thursday for another mini episode. Cheers.